Warner Brothers Discovery's board formally recommending today shareholders reject Paramount's latest takeover offer. Pentwater Capital Management CEO Matt Halbower, whose firm is Warner Brothers Discovery's seventh largest shareholder, sending a letter to the board today criticizing directors for not fully engaging with that revised bid from Paramount. Halbower arguing the $30 a share all-cash offer is economically superior, carries less regulatory risk than the Netflix deal, and could still improve, while warning the board may have breached its fiduciary duty. Let's hear from Mr. Halbower now. Matt, thanks for joining us. First time not in person, but good to see you via the miracles of television. All right, what was the point of sending this letter? Why do you disagree with the board's assessment?
David, it's a pleasure to be here, and it's good to talk to you. The board has certain rights under the merger agreement it's signed with Netflix. And one of those rights is to declare an offer as a potentially superior proposal that would allow the board to engage in discussions with another bidder. In this case, in my opinion, Paramount has offered a $30 per share that is economically superior. It is superior in terms of regulatory risk. And I understand that the board has some legitimate issues with it, but those legitimate issues don't warrant giving Paramount the stiff arm and refusing to actually have a conversation. That's not how I want my board of directors to act. I want them to be willing to engage in a conversation with a party that has the ability to close a transaction and has indicated publicly that its $30 offer is not best and final, which screams to me that it is willing to pay even more than $30.
I talked to Sam DiPiazza, of course, the chairman of Warner Brothers this morning, about risk arbs like yourself, about the changing nature of his shareholder base. He didn't seem as concerned. I wonder, are you just another, shareholders coming along here trying to obviously benefit from what you think will be a bidding war? And does your vote really matter at the end of the day, Matt?
It may or it may not. We have the ability to vote for who represents us on the board of directors. We have the ability to vote for if we want the Netflix transaction or not. We are a small voice, but I think it's important for the board to at least hear our voice as the seventh largest shareholder, because I think what they're doing is wrong. If Paramount goes away, then it is a lost opportunity. Now, hopefully they won't. I actually don't think they will. And I just want to make sure that the board, if Paramount comes back, doesn't do something that would truly be destructive to shareholder value.
Well, I do wonder then in that vein, and I've noted this, and I think you have in your letter as well, this reliance now on a sort of a new argument to a certain extent from Warner Brothers about the danger of leverage at the combined company, the idea that somehow its business will be dislocated during the period of time that Paramount is, not yet bought it, and could even decline to the point of a material adverse change. What do you make of that argument? And doesn't it seem to say it doesn't matter how much you pay, we still have this issue, because that issue wouldn't go away if you raised your bid?
Well, first of all, I think the argument is specious. If you look at the amount of debt that Netflix is going to put on this transaction, it's $59 billion. If you look at the amount of debt that Paramount is going to put on the transaction, it's $54 billion. So it's actually less than what Netflix is going to put on.
Yeah, but Netflix is an investment-grade rated company, to be fair, and Paramount will be a 7 times levered piece of junk, not the company.
The way I think about it, David, is that the Ellison family are AAA rated, and they have a higher credit rating than Netflix. And so I do think it's specious, because the idea that Bank of America and Citibank are going to fall down on a contractual obligation to finance the debt when you're going to have over $41 billion of equity that's going to be put up by the Ellison family, as well as their partners in the Middle East, which are, really have have net worths even greater than the Ellison family is wrong. That's just not going to happen. And that's not a legitimate risk factor to turn down this deal, especially when, by the way, they could have said this last time, and instead it looks like they're digging into their pocket to come up with something brand new, moving the goalposts.